Suppose you're actively trading stocks or investing, and you're spending money on software subscriptions, market data, expensive courses, or even a home office setup. In that case, you could be missing out on thousands of dollars in tax deductions every single year. Specifically, by structuring your trading activity through an LLC, you can legally write off your internet costs, your trading platforms, your educational materials, and even a portion of your rent or mortgage. But here's the thing. Most traders don't know when it actually makes sense to form an LLC for trading versus when it's just going to cost you more money and create unnecessary headaches. You also need to know which expenses are actually deductible and which ones will get you audited by the IRS. As someone who has already helped thousands of entrepreneurs properly structure their businesses, and as the founder of LLC Toolkit Pro, a platform that helps you form LLCs, I want to walk you through exactly how to write off your stock trading and investing expenses through an LLC. So let's go ahead and jump in. Okay, so let's start with the most important question, which is whether you should even form an LLC for your trading or investing activity. And the answer is, it depends on what you're actually doing. So first of all, the IRS makes a very clear distinction between traders and investors, and this distinction matters a lot for your taxes. So an investor is someone who buys stocks or other securities and holds them for long-term appreciation. They might buy and hold for months or even years, and their goal is to profit from dividends and long-term price increases. Now, if this describes you, then forming an LLC probably doesn't make sense because investors cannot deduct their expenses as business deductions. They can only deduct investment expenses, which are very limited under current tax law. But a trader is different. A trader is someone who buys and sells securities frequently with the goal of profiting from short-term price movements. They are actively engaged in trading as a business, and the IRS has specific criteria for this. So to qualify as a trader, in the eyes of the IRS, you need to meet these requirements. You need to trade frequently, regularly, and continuously throughout the year. We're talking hundreds or even thousands of trades, not just a few dozen. You need to seek profit from short-term market swings, not long-term appreciation. And your trading activity needs to be substantial, meaning you're spending several hours per day on trading research and management. Now, if you meet these criteria, then congratulations, you could potentially qualify as a trader. And this is where forming an LLC starts to make sense, because once you're classified as a trader, you can deduct your trading expenses as ordinary business deductions, which can save you thousands of dollars per year. So let's talk about what you can actually write off once you've established your trading activity as a business through an LLC. And I want you to pay attention here because these deductions can add up very quickly. So first of all, you can deduct your internet and phone expenses. If you're using them for trading research and executing trades, you can write off a portion of these costs based on business use. Typically, traders can deduct 50 to 100%, depending on how much they use them for trading. Next, you can deduct trading platforms and software subscriptions. So tools like TradingView, thinkorswim, premium data feeds, charting software, and market scanners, all of these are fully deductible business expenses. You can also deduct educational materials and courses. So if you're paying for trading courses, books, webinars, or coaching programs to improve your trading skills, these are legitimate business expenses. Now here's one that surprises many of my clients. You can deduct your home office. If you have a dedicated space in your home that you use exclusively for trading, you can write off a portion of your rent or mortgage, utilities, and even home insurance based on the square footage of that office space. And from there, you can deduct computer equipment and monitors. So if you're buying computers, monitors, keyboards, or any other hardware for your trading setup, these are depreciable business assets. You can also deduct professional services. So if you're paying for a CPA to handle your taxes, or a bookkeeper to track your trades, or even legal fees to set up your LLC, all of these are deductible. And finally, you can deduct business travel and conferences. If you're attending trading conferences or meeting with other traders for business purposes, you can write off travel, meals, and lodging. Now, believe it or not, many traders are leaving thousands of dollars on the table every single year by not taking advantage of these deductions, which is exactly why understanding the structure is so important. Now, with all of that said, you're probably wondering, do I actually need an LLC, or can I just operate as a sole proprietor and claim these deductions? So let's talk about it. The truth is, you can claim these trading deductions as a sole proprietor without forming an LLC if you qualify as a trader under IRS rules. However, there are several reasons why forming an LLC might still be beneficial for you. So, first of all, an LLC provides liability protection. So if something goes wrong in your business, maybe you get sued or face legal issues, your personal assets like your home and personal bank accounts are protected because they're separate from your LLC. Next, an LLC makes it easier to establish credibility as a business. So when you're opening a business bank account, applying for business credit cards, or working with brokers, having an LLC makes everything more official and professional. Plus, an LLC gives you flexibility in how you're taxed. So by default, a single-member LLC is taxed as a sole proprietor. But you can elect to be taxed as an S Corp once you're profitable, which can save you thousands in self-employment taxes. And finally, an LLC helps you separate your personal and business finances, which is critical if you ever get audited by the IRS. The IRS wants to see that you're running a legitimate business, not just a hobby. So having a separate LLC with its own bank account and records makes your case much stronger. Now, usually when clients start calling me to help them is when they're making consistent profits from trading and they want to maximize their deductions while protecting their personal assets. This is when the LLC structure becomes very valuable. So let's switch gears here for a little bit and talk about what actually changes once you officially register your trading activity as an LLC, because this is where many traders get confused. So first of all, once you form your LLC, you need to open a separate business bank account. And this is non-negotiable. You cannot mix your personal and business finances if you want the IRS to respect your business deductions. Next, you need to keep detailed records of all your trades and expenses. So use accounting software or hire a bookkeeper to track everything. Because if you get audited, you need to prove that your deductions are legitimate. You also need to file the right tax forms. So as a trading business, you'll typically file a Schedule C with your personal tax return to report your trading income and deductions. And if you elect S Corp status, you'll file a separate business tax return. Plus, once you're officially in business, you should be making estimated quarterly tax payments to avoid penalties, because unlike a W-2 job, nobody is withholding taxes from your trading profits. And finally, you need to maintain the business formality. So keep your LLC in good standing, file your annual reports, pay your state fees, and treat your trading like a real business, not just a side hobby. Understanding these requirements is key to saving more money in taxes and protecting yourself legally. Because once you make the decision to structure properly, you can take full advantage of every deduction available to you. Now, at the time of this video, many traders are still operating without a proper structure and leaving thousands of dollars in deductions on the table. But if you want to maximize your tax savings and protect your assets, forming an LLC for your trading business could be one of the smartest financial decisions you make this year. Now look, forming an LLC yourself is very stressful, and as someone who has formed LLCs for most of my businesses, I won't recommend the DIY approach, but use LLC services. All you need to do to avoid overpaying for any services is to use our LLC cost calculator. The link is inside the video description. Thank you for watching.